Australia's being warned of longer cost of living pressures as the IMF declares the world faces feeble and uneven growth. It comes as Treasurer Jim Chalmers has this morning departed for Washington for critical talks and a temperature check on global economic pressures. Joining me live is Shane Wright, Senior Economics Correspondent with The Age and Sydney Morning Herald. Thanks as ever for your time. We're being warned of the worst global growth in maybe 2 or 3 decades. The numbers themselves are stark, but it does go to the also risk of recession, right? That if these numbers get too much worse, I know they've still got a 1 in front of them, but how real is that risk, do you think, at the moment?
Well, once you take out population growth, it is a recession. Like we are, this is a per capita recession. Chalmers was on radio this morning giving a signal that Treasury reckons the second half of this year is going to be really tough, as the cumulative impact of high inflation, high interest rates, higher taxes being paid by a lot of people really crimp household spending. And at the end of the day, the Australian economy is driven by mum and dads and their kids spending money through cash registers across the country. So
the figures they've released on their latest projections for advanced economies we'll bring up for our viewers now. It does show Australia in the keyword of relatively good light when we look at some of the other advanced economies and their rate of growth. But the issue as well is Australia, we're an island nation, but we're not an island economy, so that's the issue. So we'll bring that up.
You could be doing lyrics for a mid-tempo 80s song with that, Tom, you know that.
Here it is, 1.6 Australia. You can see backwards in the UK and Germany, New Zealand, Japan sort of hovering, United States similar to us, and China the outlier again. We'll see if that, the China one will probably be pretty contestable, but the obvious line there is, Australia doesn't exist in that vacuum, and that's the problem.
No, that's right. And a lot of this, like you look at Britain, which is, Ukraine and Brexit. Like it was interesting last night that the IMF actually specified Brexit as holding back Britain, but don't mention that to the Brexiteers. Germany, of course, influenced heavily by what's going not far to its northeast. New Zealand, where interest rates are really being pushed up high, much quicker than what's going on here. And that's another impact which is common to Australia, common to the US.
And they've got our housing problem, if you like, on steroids in New Zealand.
They do, although their central bank last year was given the job of targeting housing growth by Jacinda Ardern, which is a very interesting development, which may be explaining what's going on partly over there. But you look at that, Australia is doing well relative to that bunch, but none of it's good. It's better than everybody else, but everybody else is also doing pretty poorly.
And when you talk about per capita GDP, a recession, essentially, so it means if we didn't add population growth, or if you factor it in, our economy's not growing. The only reason it's growing is because more people are being added to it. The point being, a technical recession still matters. It becomes very self-fulfilling.
Yes.
And it means things are even worse. But the point is, people are feeling the pinch of an effective recession.
They feel it. They feel it. And this happened in 2018, and the Reserve Bank at that time was saying, we'll be lifting interest rates next. But it got to the point that a few days after the 2019 election, the Reserve Bank announced, we're going to have to start cutting interest rates because we need to get unemployment down. We need a little bit of inflation. We need wages growth. So per capita recessions, people feel it. They may not. It's not mass unemployment. It's not businesses shuttering down Main Street, but you don't feel as well off, and I think that's what people are really going to feel, particularly through the second half of this year, as this confluence of events really gang up on them.
Amidst all that, the government's got to manage getting people through that, but budget repair. So we often talk about the simple one is, net debt is okay. It's 23% or so of GDP. It's going to 32. Again, we're better compared to many countries around the world. But our deficit, our structural deficit, if it's a normal year of money in, money out, is 2% or maybe higher, and where it's headed. It's 50 billion. Some would call it 70 billion on what's on the horizon with NDIS and defence spending and so on. We need to start that task pretty quickly.
We do, and the problem is, and it'll actually be selling it because Jim Chalmers is going to reveal a budget deficit smaller than what he forecast in October. And that's because the jobs market is still ultra tight. those wage increases have fed through and they're delivering better revenues to him, and China and the rest of the world is continuing to pay a lot for
and not
our
paying
iron ore
much
and LG.
welfare. So really good short-term conditions.
It is, but
it's hiding the structural deficit.
it is hiding the structural problem, and we saw, for instance, the argument around their pretty modest change around superannuation taxation, and the oh my God, world is going to end. When you start dealing with structural issues, that's when every vested interest in their sacred cow come out of the woodwork.
And the point of that is that might have been 1/25th or 1/35th of what needs to happen, and we saw the brouhaha over it.
Nice use of the word brouhaha, Tom.
The NDIS, they want to get that more sustainable. They'll have support for that from the opposition, but then where else? I mean, the WA GST deal.
Oh, the WA GST deal.
$5 billion a year. We don't need to shell this cash out, do we? This is
well, every taxpayer is contributing to that, and when this is it when that was put together, the no state worse off. When that ends, which is in another 2 and a bit years, New South Wales and Victorians are going to discover just how little. Well, their governments are going to discover that it's actually going to hit them, and yet they're still paying more tax over to WA. Yeah, one of the there have been bad decisions over the many years that I've been in this place. This one, which was not supposed to cost anything, is now costing $25 billion. That's a pretty bad.
The coalition wanted to keep the seats. Now Labor has a lot of them.
That's
so
right.
Want to keep the seats.
Yeah, it's not going to change, sadly.
So many other areas. The point is, it has to be all areas. It has to be spending. It has to be probably looking at revenue as well. But we don't want to hurt growth. So more superannuation taxes, maybe, dare I say it. Taxing gas properly. There is stuff out there.
Yeah, and you're right. We saw this with Joe Hockey and Tony Abbott when they came to office. They focused solely on the spending side, and that's what contributed to their ultimate downfalls.
If Labor just goes the tax side, that'll hurt them.
That will hurt them too. You've got to do both.
All right. Shane Wright, bad luck about the pies on Thursday.
There's always next week, my friend.